Jonathan, we've had a tremendous stock market crash in China, but shares of Burberry, which is widely seen as a kind of proxy for the Chinese consumer, have hung in there. They haven't done great, but they've at least moved sideways. How do we square that circle?
Well, first of all, Burberry were very good at managing expectations. So when they had prelims back in May, they did telegraph at that time that the Chinese market was becoming more challenging, particularly in Hong Kong, actually, where a lot of mainland Chinese go to do their luxury goods shopping.
I guess a lot of mainland Chinese actually do their shopping in Europe. Can we kind of quantify how much of European sales are actually Chinese sales for this company?
That's right. So if you look at Burberry's Q1 update, which covers the period to the end of June, European sales actually were great. They were up a double-digit amount.
The only thing in Europe that is up double digits,
Yes, and a large part of that was mainland Chinese on holiday in Europe. So they are going to Paris and Milan and Madrid to do shopping now, rather than coming to London, because of course the euro has weakened as a currency, which has made designer handbags cheaper in European capitals than they are in Britain.
But I guess the worry is now there's going to be a lot less of those trips, whether to London or to Europe, or for that matter to Hong Kong, if your upper middle class Chinese salary person is feeling a little more broke now after the crash.
That is the $3 trillion question. You've seen this huge wipeout of wealth on the A-share market, and some of the more pessimistic China commentators are saying, well, this will really shake people's faith in the state. It will make them a lot less willing to spend. Now, the trading update only covers up until the end of June, and the A-share market only really started falling around the middle of June, so there isn't really an overlap. And the big question really now for the remainder of the year is whether those consumers will draw in their horns. There are lots of other things in the Burberry basket. It's doing well in Japan, it's doing well in North America, its digital sales are growing very strongly.
But it's hard to see real robust growth if China is not helping. I mean, even if they're doing well in the US and they're doing well in Japan, Japan are sort of at both regions are both sort of low single-digit growth regions, right? This becomes a no-growth stock without help from China, or nearly no-growth stock, isn't that right?
That's right. I mean, Hong Kong on its own is 10% of Burberry's sales. Asia Pacific, the region, which doesn't include Japan, is 38% of sales. But the company says that worldwide, sales to Chinese consumers, whether they are Chinese in China, in Hong Kong, or holidaying abroad, account for something like 30 to 40% of sales. So really, China is what moves the dial on this company, and there's a lot of uncertainty there.
So, China watchers, watch Burberry. Thanks, Jonathan.